Hey everybody, greetings on a Thursday. Better late than never, right? Can we do that? Let's get ourselves together here. Thanks everybody. Awesome. What's going on? Just had to get a quick session in today. I'm still coming around a little bit better, but thanks everybody for being so patient, hanging in. I had to get a session in today because we have some rather significant developments in probably the scariest market of all, interest rates. We've hit some major targets that we have to talk about. So, from a harmonic pattern perspective, today's session is entitled Terminal Bars, and it's probably the most important concept of all. When we're dealing with harmonic patterns, that completion point is everything. So that's what we're going to talk about today. Next week, get back into a more regular schedule, and I'm going to be better no matter what. When you guys hear me on Monday, I'm going to be 100%. So, shout out to everybody in the chat. You guys are the best. Snipes, Slodak, Steve Smith, what's going on? David, thank you so much, everybody. Great to see everybody back here, and all the people that are watching the sessions, which is, I know it's a tough time, middle of the day for most, but it's great to see we've got a lot of people that do enjoy the sessions when they get home and they watch it on the weekends, and I really hope to make this a continued valued service for everybody. Now, again, I want to talk really quick about just getting with the software, and I'm going to put together something when I get back of like a how-to. just to show people how to get set up. What do you need to do? Give you like a 3-minute primer on how to really get going, because what we're going to talk about today, not a difficult concept. It's something that I introduced years ago, probably what, 15, 17 years ago now, of the terminal bar. And these are basic strategies that will change the game for understanding harmonics, harmonic patterns, what to be expecting. And here we have 10-year government yield. That 10-year bond ran right into the back completion of the 886. And so everything that we've been talking about with what are interest rates going to do? Are they going to spike? Um, they will. I think they're going to continue to go higher, but we know the process. The process of harmonic patterns is so critical to being able to have the proper expectations. It's really easy to say that things, nothing goes up in a straight line. The markets always go through a process of buying and selling, stair stepping up or down to get to where they're going. But we have to understand that process. With the patterns, it gives us the framework. We look for that completion point, and then that completion point, that singular bar, is the starting process for the entire analytical framework of how to deal with these things. 10-year bond right now, folks, trading 2.86% and was as high as brushing up against 3, but the numbers aren't as important as the ratio framework. Let's connect some dots. On the weekly time frame, excuse the sniffles too. I've still got those sniffles. It's so annoying. But let's connect dots. And this is the easiest way. Harmonic patterns are essentially MW formations with specific alignments, ratios, and ABCD measurements that dictate where to look for the completions. So 10-year yield right now, folks, up here with your X to A range from the 2018 peak. Let me take off this magnet. That magnet's a bugger. Okay, we go to the low. That's the range. That's XA range. Now, B point at a 50%, right? Sets us up beautifully for potential bat material. Let's see the bat fly up to the 886. Another 45% at the C point. Your 886 is basically 2.9, 2.89. Now, I was saying this in recent sessions, and I hope this is, I appreciate the emails and the feedback, and you guys have had great comments. And I don't know what I'm doing. Maybe I'm breaking it down a little bit more on an elemental process, but people are telling me that they're getting it a little clearer now. And that's my goal here, is to distill all the work, my years, decades of work, into a real simple 1, 2, 3 framework. There's a lot going on, and that's why I uh, don't suggest, I demand that you get harmonic pattern collection software. I don't care if you get a monthly subscription or you take the free trial. You have to expose yourself to what the software is generating and then just work through what we're supposed to be looking for at each step in the process. If we connect dots properly, we get the measurements right, which was probably about the first 7 or 8 years of my work to get the measurements right. Then we know what to be anticipating. We're at a major weekly 886 on the government yield. Terminal bar completed last week. And this week, we're getting our first bearish candle on the yield. This is yield. This isn't price. This is yield. That's important to understand. That the D point right here, your 886, which was 289, was overshot, brushed up against the psychological 3 level. Fine. But what's going on here the next week? The terminal bar plus 1 is incredibly significant. And we might see a pause in rates here. That's a very good sign. Thank goodness. I'll tell you, this malaise that I've been talking about, technical malaise. The market is in a technical malaise where it will be range bound. It will be choppy. It will be frustrating. It will be the opposite of the last many years, but we still read it the same way. And what we're seeing in rates actually, finally, we were gunning for this bat pattern. We did an interest rate uh, live stream about a month ago, and I'm going to retweet that. Maybe Stephanie, I'm going to get you to put that in our comments later today because this is going to be a great follow up to that discussion, but so critical. Okay, what's driving the market? What's pressuring the market's a better way to say it. Is the rising rates. And so now we're in a reactive phase where at least we can assume the harmonic pause is taking shape. Harmonic pause meaning you hit a major completion point and you get a one bar reaction, which is where we're at right now, this current week right here. Okay, that bar this week is tantamount to the entire scenario of this pause phase going forward. This plus one bar is probably more important than even the terminal bar. Why? We see the immediate reaction. That immediate reaction is the early stages and signs of what? Type 1 reaction, folks. That's what we're going to get. And that could at least bring rates down, which will finally take some of this pressure off. What would we expect here? And we're going to look at a couple of other markets that have done a very similar response, some like crude oil, okay, doing a beautiful pause, almost type 1 reaction, but finally in rates, look, beautiful bat pattern going back 2 years. You're going to have to pay the piper a little bit. You're going to have to negotiate that 886 and essentially allow some pressure to come off. So it's like this. Our minimum 382 pullback on yields, basically all the way back to 2%, 190. That would be your full reactive scenario. Okay? That's the expected return, but what I think is going to be more indicative of how this whole larger bat responds is how many bars are we going to do? We're in a 3 to 5 bar pause. Next 3 to 5 weeks, we probably hover between 2.85, 2.9, and then we'll see the larger implication. Are rates going to roll over right here? Well, we have some indication that we're overbought. Our amplified RSI. Okay, that's let's get a better. I need a better. Oh, there you go. There's my arrows. Thank you. Amplified is starting to roll over finally, where we're going to come back down. That's what I'm looking for by Friday. If that can at least come out of the zone, or maybe that takes next week, then yeah, we could get some kind of counter trend reaction rally. On a longer term basis, my concern is that your big spike in the rates will come after this pause. So if we're terminal bar plus one, which we are, now talk to me. We go into a minimum. We can think of this as like a 30-week cycle that's about to begin. This is week 2. If we're going to start from the D point, all right, we're going to now condense this entire market into essentially the next 7 months, 6, 7 months, next 30 weeks. Where does that put us? November? Something like that. So we want to look at how this follows through, and we can also assess the individual bar behavior. Now, where to look for this? Want to just bring everybody back to harmonictrader.com. Go to harmonictrader.com. Where's the website? Uh, Here's that. Let me do this and take that. Let me bring up a different screen here and bring that up. So go to harmonictrader.com, folks, and just log in, become a basic member. What you need to do is access the books. Oh, I did that the wrong way. Anyway, access the books. Okay, go to the basic members page, and I'll show you what you want to get volume 1. And this is the first place that I showed it. There you go. In the volume 1, the first place I ever talked about terminal bar. Go to page 184 on that volume 1, please. 183. Now, why I say this, why this is so critical, because for me, the patterns had to be defined. We had to nail down the completion to an exact point and then assess what is responding from there, because the terminal bar is the price bar that hits the last number in your zone. If we're bearish, it kind of looks like this, although I don't think that's necessarily the best representation. I'll get to the volume 3 illustration, but that's a real simplified concept of what we should be expecting at a completion point. When we look at some of our old examples, I mean, look at this stuff. We go back when this is 2004. Pepsi was trading 45 and it's trading what, 180 now. The whole point is that the process, the way this stuff unfolds, is the same, and it's usually going to take several bars. Here's that Pepsi chart, that example. Now that's just straight out from the book. But what happens, and the takeaway is that what happens in the immediate bars after the completion tells you a lot. Look, if interest rates were going to spike now, we would have blown right through it. We wouldn't even hold back. We'd be 320, 330, and a full failure already. So that's essential to recognize this immediate point, this inflection point, the 886. We know how powerful the 886 is. We saw it in the energy, and that's been a massive pause. Will we get a full 382? We'll either get a full 382 or we'll get like a sideways consolidation range for the next 20, 30 bars, and then it'll fail. But for now, I'm happy to see this. This is actually something to hang your hat on. That's why the market's been doing what it's doing. I mean, just the rates show it. Go to the daily chart on the rates, folks. When did this correction really begin? Okay, for most markets and most of the big tech stocks that have been destroyed, okay, that was November. And let me bring it up. But for the rest of the market, it really started end of December into January, which is like there where rates bottomed at 140, 160. And then certainly since February, March, we had a bottom in March that did end of March, early April, that really didn't lead to much. And then we've had this huge spike. That's why you're seeing the massive pressure on the market. Can we finally at least get a pullback on this where the market comes up and gives you an opportunity as a reactive move? I think so. And we're seeing it in the Dow today. Look, Dow's up, what, 500? And nothing. It doesn't mean anything. That's the other thing. Yeah, 565. Your Dow Diamonds, folks, on the daily, completing the bearish bat type 1 now. So we have a lot of harmonic things coming together. You see rates on the bearish side peaking out for now in a reactive phase. Then we're going to see this pullback end, the type 1 reaction in the diamonds on the daily. That's over. Okay, for now. for now. This is a pretty devastating continuation bat pattern that when we look at it relative to the prior peak, after all this distribution, this 354, basically 35,500 on the Dow, is going to be top range resistance going forward. And this is my concern. My concern is we come back in the next several days, maybe a week or two, and we come back. And then if we're really going to look for the larger malaise corrective phase to take shape, it's going to be on the retest. It's going to come back, retest that bat pattern, and then go into a full type 2. So this affirms the conditions we have talked about where reactive moves are going to just essentially result in 1, 2 day, 3 day phenomenon, and then they're going to go back and retest range support. Resistance support, resistance support. This thing is just bouncing, banging left to right. And I don't expect that to change. I really don't think that that market environment would change until the interest rate scenario or some other things loosen up. And again, a trader market, that's it. Today, I want to focus on this terminal bar thing because, and I'm not going to really be too specific on any one sector. I really want to hammer down the terminal bar phenomenon with expecting reaction. So let's go over to Doge quickly. What happened to Doge? Exactly what we said. Pop up, come back down, set up for the larger move. And it was on Tuesday, I was discussing that, and I was looking for, kind of the pop up, come back down, and go again thing where we're just squeezed. And it did that. I was based on the Twitter, that Twitter news, Elon Musk buying Twitter, and even that didn't get anywhere near the $54 price. But reaction up, right back down. And the other thing about Doge that I was talking about, that because we were in a type 1, we would probably come up, then come back down for a retest, and take more time before we see something larger develop. I will repeat it, and I will continue to repeat it until we resolve this larger downtrend continuation, but we're going to be reactive, where price is not so much the important aspect of what crypto is doing. It's time. I'm a little concerned about the broader markets in terms of their price more so than crypto, but I think all the markets are going to have to negotiate this time malaise, if you will. Not that it's going to hell in a handbasket. It's just going to be reactive, non-trending action. Let's take a look at another. We're gonna go. I'm just gonna shoot random stuff today, folks. That to hammer home these important points. Here's Disney. Okay, Disney all the way down at your hop level now. Finally, we talked about this. It's a deep crab off the top, back to back. Actually, back to back. Regular crab up to a 1618, a 189, back down to a deep crab, but still going through 1-2. Even within all of this craziness, you're still seeing reaction reversal dynamics. Here's your reaction phase on Disney, and Disney is something where I said, hey, keep an eye on Disney. I said, looking for it down to 140, maybe 128. We're 115 now. Do we have something here? Maybe, but it's ugly, and I think you got earnings coming up where it's going to need more time. What's earnings? Earnings are what, next week? May 11th for earnings there. So this may wash out, and we could see maybe a reaction off of this 115 level, but that's about it. This is a good opportunity for the kind of reactive moves that within a downtrend might lead to a nice sizable thrust, but that's about it. Maybe we come back, we go from 115 to about 130, 135 back into the zone as a minimum. I'm not really crazy about the trending action, but it still provides a short term, long opportunity somewhere. Like I said, 115 on Disney. This thing has been crushed. Take a look at your weekly, and it's even better. Look at the weekly patterns, folks. And again, I'm clicking buttons here. I don't need to measure. Okay, I let the software do it for me. This is why you need it. This is why you have to get the software. And again, it's really important to me that people know why I'm doing the software. I don't need to do the software. And if you look at all the rip off, and I mean rip off garbage harmonic pattern programs out there, they're crap and they're only going to lose you money. Why? Because they don't have the right measurements. I can do a software and put, hey, there's a 1-2-3 ratio, followed by a 1-7-8 ratio. It doesn't mean anything. If you don't have 1-6-1-8s and 8-8-6s and 3.14s, all right, which are pure geometric measurements that work, they're why we're harmonic. And again, another area of discussion of why the ratios work is something Mitch Ray and I, a couple weeks ago, we spent about 20-30 minutes talking about why the ratios work, related to nature, what have you. What I'm seeing out there, and I'm trying to deal with it, but the rip-off harmonic pattern programs do not have the right measurements. You might as well be throwing darts. When you go through the automated patterns and you see the reaction, the reversals, off of the uniformly defined measurements, okay, then you know you're at a true harmonic level. Disney on the weekly, certainly a true harmonic level. Your weekly hop level, target 2, all of those dynamics tell us, all right, that should be it for now. I'm not crazy about Disney as a stock, as a company, and don't even let me go there. Uh, it's a lot of garbage, quite frankly. But for a stock, speculative interest, okay, we're oversold. And we're on a type 2. This off of the crab pattern, we're a type 2. At the hop level, 115.90. HSI, here's the critical thing that sets us up for next week, okay? That, all right, this could be a long opportunity into that zone. We pop out of that HSI level and we are clearly oversold. We still need to get out of the zone. This could lead to a reactive move up. But that's it. Nothing more than reaction. And so get on your short-term trading hat and get to it for the next several months. Until the market does a lot of work, we are just going to be in these continued reactive phases for a while. Forget the trend. Forget the uptrend, if you will, or long-term uptrend. Even, let me just jump back to the diamonds quickly. Look, even we're up 600 today on the Dow. Folks, that's not trending behavior. When you go back to back like this, and let's just take a quick look at the diamonds. We're down 1,000 or 900 one day. You're back up 300. You're down another 500. You're back up 600. That is not really consistent trending behavior. That's reactionary moves that I'm a little concerned about at the moment. Here's your uptrend off the COVID low. You broke that. Okay, there's no doubt about it. The way that I would look at that from a harmonic pattern perspective is, until I see something larger develop off of this top, it's going to take more time. It's not an area for resumption of any trend. If anything, look at the daily bat pattern that was developed. We've seen a lot of these. We've seen a lot of these type of patterns where The reaction phase of that bat pattern is over. And my concern setting up for the summer is we do a really weak rally over the next maybe 4 to 6 weeks. We come back to this bat pattern. And if we're going to get the full blown bear, it's going to be off of that level. We're going to come back, retest, roll over, and then we will have some serious things to negotiate. I feel like at the moment, maybe trade the stocks, but there's going to become a time. There's going to come a time here for some serious option plays. Uh, I do want to look at things like put call ratio another time. I know put call was pretty high recently. I just think that we're not there yet. And even for the call positions like weekly calls, things that I've been looking at, I feel like it's not yet the environment to even be trading the call options or the puts, any options, because the grind has been so severe. Unless you're going to day trade those options, weekly options not be a bad place to go. I just think we're in an environment where that kind of grinding action, if you're not right, is really going to do damage. Just be aware of that. I think the next trending move is going to be lower after we retest this pattern, but that's going to come maybe in a month or so. Let me check my chat. What's up, people? I lost my other. Let me bring you guys over here. Let me see what's going on. Got 100 people or so in here. Thank you, everybody. Excuse me 1 second. Hold on 1 second. Okay, appreciate it. Put call level is at COVID-19 levels. Thank you, Dalton. That's a great comment, and that's the truth. And you want to respect it. Put call, if you're not familiar with put call ratio, please be aware that that is a great contrarian signal. If everyone's buying puts, okay, you're probably at a short term low. Hey, Paul Sconson, I haven't talked to you in a while. Sure, we'll look at OIH and OIL, oil services. They're going to give us another opportunity. And yeah, we'll look at ARK, Dalton. We'll look at ARK and TQQQ. Those are good instruments to take a look at as well. Thank you, everybody else. Thank you, RJ. Appreciate that. The software updates recently, a lot of people really happy with. We've updated the program. If you haven't updated your software yet, by all means, please simply just reload your indicators. Most of you won't be able to access the old version, but the new version is the indicator combo. Also, the update that we just finished 2 weeks ago was HSI and HSI arrows. And my apologies, last week I was showing an older version. I had opened a layout that did not update. So if you don't see something if I'm showing you something on my software that doesn't link up with your software, please contact me. And again, last week there was an issue where I did not update my HSI and my arrows. But all you need to do is simply remove this indicator, hit the X, and reload it. Same with the arrows, and you're going to get the most recent update, which is probably the final identification update we've had to do to then move on with the bot and everything. Remember, I was going to do the bot back January, February, but then PineScript updated their language, their major the programming framework. So we got that fixed. We got HSI inconsistencies worked out because that's so critical. HSI is so critical. So now we can move forward with the rest of it. Let's look at a few of those, and I want to look at a couple crypto as well. The other thing I wanted to look at really quick before we get out of the bond discussion. Look, 30-year on weekly. Let's go weekly 30-year. All right, 2.92 on the 30-year. which is amazing because it's not much different than the 10. But here's the thing, and that spread is like amazing. It's not even it's a what, 500ths of a percent difference between the 10-year. More importantly, for us as harmonic pattern traders, is that we recognize that even on the 30-year, we have a beautiful type 2 Gartley. There's your type 1 down to 176. All right. Then the most recent move up to our type 2 return to the hop level at 276 is the major retest. And again, look at terminal bar for that on the type 2 where we hit the hop started 2 weeks ago. Then we were followed by a beautiful doji pattern up into that zone, and now this week some downside doji action still, depending on where we close tomorrow. It doesn't matter. If we close under last week's close or even close underneath the low, which would be quite a move within the next 24 hours, anything under 290, 288 is going to be quite significant where we could look for a larger pullback. I think rates are, these short-term phenomenon. Your 2-year is hitting a terminal bar now, major weekly type 1. Your 30-year is a type 2. All of this should give us a minimum pause. We don't see rates surging. What is happening at that terminal bar? Just ask yourself that question. It's hitting the hop on a retest. Did it blow through? No. Did it continue? Bar 1, bar 2? No. Actually, it's rolling over. These are the early signs. So minimum pause to pull back. Pause to pull back on rates. That should give you at least a bounce in the market here over the next couple of weeks. Thank goodness, right? Let's look at that TQQQ because that's that triple QQQ. That's a really aggressive vehicle. Believe me, I've been thinking about how are we going to play this. If these markets aren't going to do anything, I don't think the major stocks that we've been looking at are going to do anything then bounce up 5 points one day and back down 4 points the next day. Maybe these ultra 3x ETFs might be a better way to trade these vehicles. Here's the TQQQ, and this really depends on, this is the triple Qs. This is really dependent on the markets moving. So since the top, NASDAQ top, if you will, that's down 50%. NASDAQ's down 20 something. It was down like 22% at the low. This is roughly would be triple what that is. All right. Not a heck of a lot here, in terms of patterns. Let's look at the weekly. There's the weekly. But the TQQQ, triple Qs, do show us, I think, the movements in a more pronounced fashion. There's COVID low. Everything we want to think about, discuss, is relative to the COVID low. I mean, every market. We can look at all-time measurements. We can look at 10-year stuff. But I think the most immediate assessments are what is it doing? What is any market doing relative to that COVID low? And then connect your dots. TQQQ, okay, it's broken the uptrend, no doubt. Let's connect some dots now harmonically. If that's X to A on the TQQQ, what kind of formation? Do we have an M formation here? Not yet. Not really, but we do have this XA kind of shark, possible shark formation where X, ABC, throws down into a 1618. 1618 is like right there, 36 and change. Let's bring it out a little bit like that. It's 36. We didn't hit it yet. And a larger shark 886 formation looks like something like that, which, I know that sounds crazy, all the way down at $15, but this is the way this thing moves. It's I'm not saying 15 yet. We're probably going to have a little short-term bounce in the meantime, but your larger COVID target of that 886, that's a possibility we have to keep in the back of our mind. Let's go to the poster child of tech from 2 years ago, ARK. Those are good ones, Dalton. Thank you again. All right, ARK. I haven't looked at this in a while. We have a couple big patterns. We have a bat pattern that's why it's in blue. It's still pending. And in that CD leg, okay, we had an overextended crab pattern. More important is the 886 here. Off of, incredibly, that we're already there on the COVID low. COVID low, March 16, 2020. Right back up. C point 886. On the money. Today. This week at $48. So what do we do in these situations? Well, if that's terminal bar, and we know that is, this is how we assess it. We're looking on the bullish side for, tell me what happens after. There's an example of a bat pattern after. Here's terminal price bar. That's the illustration. I should bring up volume 3 because that's better. Those are better illustrations. I'll bring up volume 3 in a second to show you. I think what a more realistic illustration of terminal bar, because terminal bar hits and it takes, like I said, 3 to 5. If it doesn't matter the time frame, this is one of the nice things about the framework, that if you're weekly, okay, you wait 3 to 5 weeks. There's volume 3. Let me just show you that term. Oh, that's all the way in management. That's going to be towards the back of the book. Although, wait, no, here it is. That's a pretty good one. Even the phases, our bullish phases of harmonic patterns, is actually really good, because trade identification starts at the completion of terminal bar, and the assessment window is the 3 to 5. Let me see if I find a better terminal bar illustration. Where'd you go? Let me bring it up. I have to go all the way to management. Yeah, go through this. Come on, where'd you go? It's 160. There you go. Terminal bar. This is a better illustration of what we should be expecting. Go to volume 3, folks. If you did not know, you can get the books. Everything's at harmonictrader.com. Volume 3 is a major update and with a lot of new concepts built in. That's why I did the book, because it really did bring in more of these realities. I think when I was showing people volume 1, that concept of a singular terminal bar was to really hammer home the idea of a singular point. But in reality, what we see is more like this kind of stuff. Come into the zone, maybe partially hit the zone, and then bounce around here a few times before you make progress. So if we look at ARK and we see that, well, we've got the crab pattern, but we also have this bigger bat pattern. All of that combines to define the larger zone. As low as this 49 level, 48 level, that's your terminal bar on the weekly. Remember, this is another one of these all-time kind of recent IPOs that have come out in the last 5 years that is correcting the whole cycle. It's the only way to describe it. We talked about that with Netflix, how Netflix is a major correction of the all-time history. That whole cycle is the 10-year Netflix cycle 15-year Netflix cycle is over. And we talked about the possibilities of that going all the way to its 886. So that's what we're dealing with, especially when you get into such technical damage that we have seen. So even if great one to bring up ARK, but think of it this way: this week is terminal bar. So between now and essentially, I don't know, I would say like mid-June, the next 6 weeks, don't be surprised if we sit sideways or we pop in this zone around 48, maybe as high as 60, but then come back down. Let me show you another one that we have highlighted recently that is exhibiting the same characteristics. Here's Zoom. Okay. Oh, why? No, wrong exchange. Zoom on the, here we go. Zoom on American Exchange on NASDAQ. There you go. Zoom, I talked about that the XA level was at 122, but the larger level of terminal bar and where that real stabilization occurred was as low as I think 95, 97. And take a look at what's going on in this weekly zone. All right, the larger check back retest. How many bars are we? 6, minimum 3 to 5. Terminal bar is there. Now, tell me what that looks like. Tell me what's happening there. Where does the completion occur? Where's confirmation occur? Do we see any kind of major bar reversal? Because that's all of this is the same. All of this is setting up where you're in that new phase. Here's what that phase looks like. We should go back to volume 3 because now let's look at the illustration here of how that comes together. Does that look? That's a weekly chart. So let's just imagine that the bullish terminal bar, okay, that, oh, wait a minute, 1 second. There you go. The bullish terminal bar, all right, that is Zoom. Where the terminal bar is, that was several weeks ago. And we're bouncing, come back, retest. Now we're back down in the range. What is down here? Well, you have the check back right there on the weekly of HSI. A couple of weeks ago, it wasn't ready because we didn't do the check back. We had pattern completion. We go into a reactive phase. But now Zoom is about to retest 97 and finally check back. That's in a better spot after doing, we're week 9. We're week 9, but relative to how many weeks? So there's your 2020 COVID low. Beautiful bat pattern. And that's the kind of major opportunity I do want to start lining up. But now within that range, show me what we have there. Tell me how this is it stabilizing? Do we have any clear breakout signals? No, not yet. But that's ideal consolidation, much like this illustration. And it incredibly, folks, I mean, some of the stuff that, I've been putting out here for decades was to establish the uniform behavior on any time frame, any market. That's what harmonics are all about. Here's a couple notes from that where we want to focus on the range. We want to assess our confirmation factors. And then we want to look for the decisive character of the price action closing above the zone and starting to build out of that zone after completion. That's why we know this is still early. Zoom is extremely early, and I said that weeks ago. A couple people, I think, mistook what I was saying in terms of jumping on this as an opportunity. It wasn't what I was saying. I was saying line it up. And this is full reset material across the board. Imagine buying this thing at 300 or 400 or 500. Here's a couple other things that we look for, real easy. after terminal bar completion for Zoom or any of these that are shaping up like this. I want confirmation. I want to be right of the downtrend, which we just did a couple weeks ago. Now I want to look for the development to the right of that phase. Let's just dial it back quickly to say the 30-year or 10-year, because we're earlier in that development, but it is absolutely critical to understand where you are. Because look, if you're not aware of the terminal bar, you're not aware of, say, the dynamics that have to take shape, you're not going to recognize this stuff until 20, 30 bars later. We're like, oh, yeah, that was it. That, of course, that was the number. And, there's a lot of that goes on. Some of the work that I see by these other harmonic pattern software is they're going to show you something that finally worked out, okay, after the fact, 20, 30 bars later. No, I want to highlight it bar 1, bar 0. Terminal bar is bar 0. But we know what we're looking for in this expectation window, where the singular action, terminal bar, followed by, ooh, nice little 1 bar reversal, bearish candle. How critical is that? It's just material to what our outlook can be for the next 30 weeks, 30 bars. You want some clarity on interest rates? We're going to look for that in the next 2 bars. Any kind of breakdown from this point forward should get that going and should finally bring some relief to the interest rate scenario. Let's do a couple more. What's going on, guys? Let me check back in there. No, I haven't even looked at Bitcoin yet. I'll go to Bitcoin in a minute. Let's go to the oil and BOIL and OIH, and then I'll wrap up on Bitcoin. Here's oil. Isn't that Triton Energy? Or what was that? What is that one? Oh, that's Oil India. It used to be called Triton Energy, I think. Long time ago. Oil India. That must be. Oh, that's on. Let me look at that. That's the India exchange. Oil India. What's it? Oil is it used to be called Triton Energy on the American exchange. It's now IPATH Pure Beta Crude Oil ETN. So it's another one of these ETN ETF suckers that that Oil India. That was pretty interesting. But this is the American exchange. So look, here's oil doing a pause. And remember what I was saying, when your primary pattern fails, like that fails on the daily, you got to kick up to the weekly, to the longer term time frame to understand the context of where are we. So this, yeesh, yeah, big pause. Does this have any? How far? This shouldn't have been in business more than a few years. Yeah. I'll have to do some research. I know oil used to be called Triton Energy. But this is just another pause before we go higher. And what I like about what's going on here with the oil and at that 886, I'll get to that in a second, is that the reaction is a dud. So if this was crude oil and your all-time 886, if we were to go into a full 382 reaction, it would be like that. But if you don't get the 382 reaction, the harmonic pause, the sideways move, will essentially just do a quick reaction and go sideways for 30 bars. And it might break out before 30 bars, but tell me what we're doing by bar 15 or 20 in that pause. Clearly, we're pausing. We're not breaking down. And I still say that crude oil is going to be a longer term run. We ran into some massive weekly numbers that capped it for now. Let's look at OIH. That definitely has been a better move. OIH 280. Yeah, that's come off the low. This is oil services, and a lot of those stocks were priced for zero in the 2020 crash. Amazingly, that was another one of those just market moving way too far, too fast. And oil services, here you go. Daily chart's probably better. What do we got here? A few different patterns. A little Gartley on the low, but again, another beautiful example. Take a look. Let's assess this Gartley on oil services. Bearish pattern, and if we were just to treat that independently, forget everything else, just say, let's look at terminal bar. And let's tell me what it does 30 bars out. There's terminal bar. Count it. To the right. There's 30 bars. What does it do in 30 bars? It's a sideways dud. Goes up, goes down, not much, but here's the other thing that sometimes requires patience, discipline, that if this dud is going to be like that, where it's just kind of a reactive move, doesn't even get to target one, goes sideways, what happens in these instances is you will get a pattern in between. And we got a bullish pattern that came back and tested. We never got to target one, did we? No. We hit a hop level here, but this is really indicative of consolidation that goes sideways, and you don't know it until it happens. The way that you recognize it is that you, like we're seeing right now in a lot of the oil stocks, they're kind of doing this. They had a huge move, and then they go sideways in that consolidation range. There you are. You're 30 bars here. And now OIH just generated another bullish HSI on the daily. I expect that to continue. This is, look, this is strong action. This is it was a very hard throwdown in the last 2 weeks. That kind of move was really severe, but no follow through. And now you get a bullish HSI. I'm looking for oil to start to turn back up. Boil, here we go. Boil, nat gas is down big today, but it is setting up perfectly within harmonic pattern framework. Most of you know I love natural gas. I still think it's got a ways to go, and it will take time. I'm targeting a 10 handle, meaning minimum nat gas will go up to 10 on the spot price. I think more like 14, 15. But it's going to take a year or 2 years. That's where you have to understand the stair-step mechanism. Boil, we had this crab pattern, and we were recognizing that 2 weeks ago. I was saying sell profits into this for the reaction down, and our target one level at 78.87 is starting to firm up. The nice thing that we see now that we didn't have last week, we got HSI. We have HSI in the zone. I would say somewhere around 78 is your number, folks, where this will set us up, despite today. They're getting hit hard today, but just another sign of the degree of reactive one-day moves. One day huge down, hit your numbers, come back up. That's what this is doing. Boil, back down here. I would say if we get a check back to that 77 level, maybe tomorrow, maybe into next week, that sets us up for the type 2 return. Again, target 105 to 112 off of that level. Let me see if there's anything happening on like a 4-hour time frame in that zone. Remember, I want to see like Give me a bat pattern. Give me something at 77 on an hourly. Yeah, nothing yet. We have some HSI, but still early. I think, look, natural gas, crude oil, massive first quarter move. Amazing. Nat gas actually, the second quarter has been strong as well, but it's going to take more time. I don't. Let me see here. We'll come back to this on Monday because I do see this thing at your 81. I'm looking at this at 77. Let's see what this does next week at 77. One or two more. Let's get to the Bitcoin. To the Bitcoin. Bitcoin, time, not price. Time, not price. Michael Saylor's not selling. I don't think anybody that's a massive holder of Bitcoin, I think they're going to hold on to this. They're going to go to their grave with it. They don't care. They're going to stay with Bitcoin. Now, Bitcoin price is not a factor, it's time. But here is the development we have discussed, that we have some successive HSI 1, 2, 3. That's building, building, building. Okay? Don't expect much here. We're certainly squeezed. 38 on the downside, 47 on the top side, where that range is going to take some time. Let me show something that is kind of sticking out for me, that if we can get it, notice how Bitcoin has not been able to really follow through. Every time it's poked under 40, the buyers come in. Here's your last HSI that triggers around 39,700. The more important event, if you will, on Bitcoin on your daily chart is we're going to try to take out this 50 level and get into an acceleration phase. So again, Bitcoin may consolidate for a few more weeks. You might find yourself bouncing between 38 and 42, but at least we're seeing development. And let's just blow up the RSI. Here's amplified RSI. Let's blow that up. Okay. We have a secondary test. I wish that would have hit the oversold again, but at least you're developing kind of a W formation. And you can connect dots the same way on the indicators to get an understanding of where this is. If that's X to A, there's B, midpoint, come back down, C. All right. If we can break out to your BAM scenario, if we can get an indicator breakout in BAM, bat action magnet move on the indicator, where your indicator takes out that B point at basically the 50 level, this is where the larger accelerations can occur, at least to get another thrust up. That's where the indicator comes and helps you understand that that's in position. Has to break out, though, the next 2 days. I think this is going to be a critical weekend. I've been looking for a big move in May, some kind of candle, bigger candle. We are 2 days. Saturday is the end of the month. We'll start a new week. And again, next week, if we can get above that 50 level, that would at least be a little something for May, to then we can get back up into this higher range. And let me just, if we're connecting dots on what this last little corrective move has been, it's kind of like this. You go X to A, B, C has to be the low, 37.8, that has to be your low. And by this weekend, I want to see the breakout above 41,000. Have to get above 41,000 to set up a shark scenario where we go back and test the top range of the zone. I'm okay with all of this. I really don't have a problem with any of this. Hold on one second, folks. I got to wrap this up. I got to look here one second. Bear with me. But Bitcoin, I'm impressed. If Bitcoin was going to break down, I think we'd be a lot lower. I think we'd be chasing that. We'd be threatening 35,000, not holding 40. So all of that, that's a good spot. I'm pretty happy with Bitcoin. If you see the market going down and Bitcoin's holding 40,000, you're a happy camper. I think Michael Saylor's probably like told you so. I did want to bring up KNC, folks. The one crypto that is really doing things, continuing to do things. Now, broke out to new all-time highs, pretty strong. The way that I've been saying is break this down on your 5 minute and just trade it. Trade it. Because look at what's doing on a 5 minute. A whole lot of swings here. Since we talked about this last week, again, just showing you where the automatic patterns are getting generated. Whole lot of opportunities from 5 to 550. And I still say that's the way to trade this. Don't hodl. We're not in a hold market. We're not in a hodl market where things trend. And I even though this has been strong and you're at all-time new highs, okay, no reason why this could not come back down and zigzag more. Not a point to chase. Let me go to Ethereum really quick. Ethereum holding 30,000, holding 3,000, the way Bitcoin's holding 40,000, and we'll still consolidate here. I'm not. Again, if you're going to trade this stuff, which you can, sell the thrust, sell your oversold moves. 4-hour time frame. Check this out. I thought this was interesting. Last couple of days that we've seen some back-to-back patterns. It just exemplifies what I'm talking about. We get down to terminal bar, just a reaction, straight back down. That was the Doge announcement. Come back down, and you just continue to bounce. So it's not like I want to look for a spot to buy and hold this thing. I just wanted to keep trading those reactions. That's what we need to do, folks. Look, if we're going to get through this summer, and this is going to be kind of my final talking point. We're going to get through this summer, folks. We're going to have to be more traders than anything else. As if that's crypto or otherwise, we will get those major opportunities, but they're not going to yield anything more than your 10 or 20% bounces, which are great moves only if you seize them, capitalize on them. Look at our last session on Doge. That's exactly what I expect this market to be doing for the next several months. Hard up, right back down. Hard up, right back down. So, got to go with the levels. Stay with that mindset. We'll come back on Monday. Everybody, have a great weekend. Thanks for your patience during this time. Next week, we'll get back in the swing of things and then really start to gear up. But go to Harmonic Trader, folks. Everything starts there, please. HarmonicTrader.com. Get the books. Get started on your journey there as a basic member, and then get the software. That's all I can tell you. You guys can watch as many of the programs, and I think you should. But more important, you need to be working with the software. Take advantage of what I'm offering with the free trial. Until Monday, have a great weekend. As always, go get them, and we'll see you then.